Okay, quick Monday morning radar update. So we've got 4 on the floor today. We're firing on all cylinders. Small caps acting very nicely last week, and large caps have just blown the roof out today, haven't they? So very, very frothy open, straight line. What I will say is, it's easy to get the FOMO on a day like today. And, I haven't looked through the volume leaders yet in the last hour, so I don't know how the stocks are reacting, but I know there's a lot on volume. It's probably one of those days where just let the zombie hours sort of play out and cruise on into the US Open, and then get another view of what's on volume. First thing I will say is we're probably going to see a lot of metal stocks. They're definitely on volume today. I can see in the small caps I follow. JLP and SLP on volume, huge volume early on, so good open interest on those. First things first, we see the signals before the move. The signals happened last week. We saw the large caps, the leaders, throw the swing points in, and then they traded inside days on Friday. So, chasing moves or positioning for moves, you decide. The person who knows how stocks reverse sees the signal. They don't all hold. It's not an exact science, but knowing where you want to sort of do business and just trading the signal over waiting to see a huge move and then jumping on the huge move and chasing things, you might think you've got a better chance of, success chasing things. You get a lot more reward to risk positioning for things. Just see it, wait for it to, know the entry, see it, trade it is basically how it goes. Blinkers on. Do not listen. The opinions last week were so bearish on commodities, and what's happening today. We just saw the commodities throw swing points last week for the bulls. So, what we see today, we see in last week's screens at trading basis. Moving on, let's quickly have a look at the metals and mining. Nothing bearish there, was there? We could go through the sort of the zinc and the copper. These threw swing points down here, and copper was a little bit later this time, but it threw a swing point on Thursday with the main miners as well. You might remember. So, what's worth noting? Let's just talk about trends and volatility. So while we're on this metal subject, I'll just use Fevertree as an example because it's a great sort of explanation of how an outlier, an outlying trend, an outlier being one what just continues to trend for longer than the average trend is basically what an outlier is. A kind of one-off sort of event. Not event, but the ultimate trend. Think of the outlier, the ultimate trend. On the ultimate trending run, there will be pullbacks in the high 20s to sort of 30+% pullbacks. If you can't stand that volatility, you are not riding out a trend in a primary trend. You are straight off the primary trend into the swing trading. Now, and forget investing, because that's you're just not even in the ballpark for investing. When it comes to commodity related, and I'll just draw this on the charts, put percent, the average sort of volatility of a top quality trending growth stock, you could probably add another 50% to that for commodity related, because you can look at the great gold stock fundamentals, what are fantastic, and on a lot of the gold stocks, but still gold had its run, and the commodity related effect pulled them all back down into deeper retraces. it is what it is. Commodity related is always going to be, we say commodity related is a pain in the ass, and it's as simple as that. It really is. They're going to be more volatile. So, metal stocks, mid to high 30s is pretty up. Even 50% pullbacks on some real volatile ones, without breaking trend. Well, how do you deal with that? Well, position sizing is the key. It is the holy grail. If you're, commodity related, you're wrestling angry snakes. Without the commodity related, a great growth stock without commodity related, you'll see this lovely action. And the key is to try and find the lovely action. I'm showing it here. This is lovely action in a commodity related metal stock. That is what you want to see. SLP's got the same action, really sort of orderly. What I will also say is, there's usually radio silence when we're positioning in these things at Trading Bases. We trade a signal, we don't trade any kind of story or news, and it's usually radio silence, and it's usually maximum reward to risk, and it's usually a really structural setup. As soon as the stock starts doing well, we say it's, here comes the story zone, because the media, the blogs, the podcasts, everything, the webinars, it's all aimed at stocks what people are looking at, because they look, they want hits. So the story zone adds this extra volatility, and it adds a lot of scared investors. They don't know about position sizing, they just know stories, and they chase, and they buy this and they buy that, and there's the scare tactics on the pullback, this and that, and commodity price, whatever it is, all this scare tactics come out. Everyone wants to be right, and especially ones with lots and lots of hits, they have an effect. So just knowing how volatile the product is, you're always too heavy in a stock when it's in its pullback phase, and you're always too light in the stock when it's ploughing higher. And at the end of the day, the best way to do that, control left hand mouse button on share scope, and just drag it out to where the trend started. And we don't need no fancy diagonal trend lines, just use a channel, because a channel is actually just taking into account the price action of the stock. If you start drawing trend lines, you've got your own little bias in the mix. So down in the pullback is where we bought this. Maximum reward to risk. Pullback in here, someone who's holding this, it's like a hot potato now. It pulls back. This area here, 27% pullback. Ooh, just want to log some of those gains. This, that. As a trend follower, that is normal. I'm already position sized for that, and I've got a huge percent cushion. So that's how we deal with it. Do not deal with. I suppose the best way to bring this across is, if you're getting scared because someone's wrote a blog on your stock, or the bear points, the bull points, your own, when you take the position and how you manage the position, that should not override basically your management should take everything into account before it happens. This is a commodity rated stock. It could swing 35% against me. That will be very normal. How am I going to deal with that? Am I going to puke on the lows? Well, if you are, you probably weighted wrong. So, it is what it is. It's going to visit this area. It's going to visit this area. It's going to visit this area. That's pretty normal action. It will back, the fundamentals will backfill into a racy chart over time as well, and everyone will tell you, bust too full and stuff like that. The point I'm trying to make is, if you're riding a big outlying winner anyway, everything's going to be You know, it's gonna be all the same stuff. You know, all the bull points, the bear points. There'll be unbelievable noise on the position, and at the end of the day, if you've got a methodology, you know how stocks trade. That is the key. Blinkers on. And I'll just add a little bit on the end of that. You know, people will say, "Ah, yeah, but you know, this research will, you know, it will point out the bare facts, and you know, look at that position. What's down 50% now because of that bear point. You know, someone made. If you go looking, you will always find a bull fact or a bear fact. But I'll tell you what, you don't have to tie yourself in knots. You just have to have a way of trailing your position, a way of managing your position. And I would say mechanical is the best way to go. You know, I'm pretty much mechanical. I'm price action trail. If it trades my level, I'm out. Simple as that. Other than that, I just keep riding them out. And your position doesn't make 200% if you get scared at 100%. It doesn't make 300% if you get scared at 200%. It doesn't make 400% if you get scared at plus 300%. You know, you've got to be sensible and just understand that at some point the stock will stop ploughing forward and you will give back the tail. The tail is the bit you have to be happy with. If you start strangling it with a trailing stop, well, you're going to be out before the trend's finished. Is basically the if you're going to if your trailing stop area is too wide and it's huge volatility that you know you're going to mismanage, well, just when the stock is frothy, just it's a good problem to have, is what we say at Trading Basis. You sell down to your sort of puke point. Is the sensible sort of thing, rather than know you're going to puke. Just sell down to that puke point. So that is a little bit on it's a lot on volatility and a lot on position size and a little bit of psychology in there as well. But it really is the key to riding commodity related stocks. What's moving today? I'll quickly just bring it back up. There's a lot of stocks moving. I'm just going to hit the volume leaders. I'm going to drop the volume leaders in on a separate video today because I've done a lot on this already. I'm just going to have a quick look. It's 10:30. We should have traded 29% to be on average volume. Large caps are on volume. And I will just bring the small caps up. When they're ready. Yeah, there's a lot on volume in the small caps. Let me have a look. Industrial metals, oilers are on volume as well. And a healthy mix is the best way I could put it there. So, I'll leave it there.